a staggering $293 million was siphoned from the Kelp DAO in what is now being called the largest DeFi hack of 2026. This event has sent shockwaves through the cryptocurrency community, raising urgent questions about security and regulation in the decentralized finance space. In the wake of the Kelp DAO hack, the decentralized finance (DeFi) sector faces significant challenges and potential transformations. This hack, which exploited vulnerabilities within the Kelp DAO platform, has raised alarm bells about the security of decentralized applications. The incident, which resulted in substantial financial losses for users, underscores the inherent risks associated with investing in these innovative platforms. As a result, several potential scenarios could unfold in the aftermath of this event. First, we might see a wave of regulatory scrutiny as governments and financial authorities react to the growing concerns surrounding DeFi security. This increased oversight could lead to stricter regulations, fundamentally altering how decentralized platforms operate and potentially stifling innovation. The need for a regulatory framework has been a topic of discussion for some time, and this incident may accelerate those conversations. The DeFi community may respond by implementing more robust security measures and rigorous auditing processes, aiming not only to safeguard assets, but also to regain trust among users who are now wary of investing in these platforms. Experts predict that if a comprehensive security framework is established, investors may gradually return to the market, but this recovery could take considerable time. Moreover, this incident may catalyze increased collaboration between DeFi projects and traditional financial institutions. Such partnerships could help bridge the gap between innovation and security, ultimately enhancing overall standards in the industry. In the coming days, users and investors should closely monitor announcements from Kelp DAO regarding recovery efforts and any proposed changes to their security protocols. The impact of this hack could resonate throughout the DeFi landscape, prompting a reevaluation of risk management practices. As stakeholders navigate this tumultuous period, it will be crucial to assess how these developments shape user confidence and market dynamics. The DeFi sector may emerge more resilient and secure, paving the way for a more trustworthy future. The Kelp DAO hack has sent shockwaves through the decentralized finance (DeFi) community, revealing deep-seated vulnerabilities in a rapidly evolving sector. This incident is not an isolated event, but rather indicative of broader trends within the DeFi landscape. Over the past few years, the sector has witnessed extraordinary growth, with total value locked in DeFi protocols skyrocketing from $1 billion in early 2020 to an astonishing $100 billion by early 2026. However, this meteoric rise has been marred by a troubling pattern of security breaches. Hackers have increasingly exploited weaknesses in smart contracts, leaving numerous projects and their users vulnerable. Kelp DAO's leadership, despite facing prior criticism for insufficient security protocols, ignored repeated warnings from both community members and external auditors. The $200 million Poly network hack served as a stark reminder of systemic flaws pervasive in the DeFi ecosystem. Yet many protocols, including Kelp DAO, failed to adopt necessary safeguards. The anonymity and lack of regulatory oversight in the cryptocurrency realm often embolden malicious actors, allowing them to exploit unsuspecting users and developers with relative ease. The implications of the Kelp DAO hack are far-reaching. It not only undermines user trust, but also raises questions about the long-term viability of DeFi projects that do not prioritize security. Investors may become increasingly hesitant to engage with platforms perceived as risky, potentially stifling innovation in the sector. This incident could lead to increased scrutiny from regulators, prompting a shift toward more stringent compliance measures. Looking ahead, the DeFi community must prioritize robust security measures and foster a culture of transparency and accountability. As developers and stakeholders reassess their security frameworks, the hope is that lessons learned from this incident will lead to a more resilient and secure DeFi landscape, ultimately ensuring the protection of all participants involved in this transformative financial ecosystem. The Kelp DAO hack has sent shockwaves through the cryptocurrency community, raising alarms about the security of decentralized finance, or DeFi. This breach, which resulted in the loss of significant funds, has already prompted immediate market reactions. Investors have swiftly withdrawn their assets from various DeFi protocols in response to the incident. Just hours after the news broke, the total locked value in decentralized finance plummeted by nearly 15%, leading to staggering losses exceeding $10 billion. This breach not only affects investors financially, but also raises pressing questions about the safety and security of their funds in the DeFi landscape. Historically, high-profile hacks in the cryptocurrency sector have precipitated sharp downturns in the market. The Kelp DAO incident serves as a stark reminder of the vulnerabilities that still exist in this rapidly evolving financial sector. DeFi has long been touted for its potential to democratize finance, offering users greater control over their assets. However, this promise hinges on trust and security. If investors begin to lose faith in these protocols, the repercussions could be dire, potentially triggering a broader market collapse reminiscent of previous downturns linked to security breaches. The economic ramifications extend beyond immediate financial losses. The fear of hacks may deter developers from innovating new DeFi products, stifling the technological advancements that the sector relies upon. This hesitance could lead to stagnation in an industry that thrives on rapid innovation and adaptability. Moreover, for the average investor, incidents like the Kelp DAO hack can be daunting, emphasizing the inherent risks involved in cryptocurrency investments. This situation underscores the urgent need for comprehensive regulatory frameworks to protect investors and uphold the integrity of decentralized platforms. Without appropriate regulations, the DeFi space risks becoming a chaotic environment where users face considerable risks without adequate support. Looking forward, the aftermath of the Kelp DAO hack may catalyze a reevaluation of security protocols within DeFi. Developers and investors alike might advocate for enhanced transparency and more robust security measures. This critical juncture presents an opportunity for the DeFi ecosystem to prioritize security and restore confidence among users, ultimately shaping a more resilient and sustainable financial future. The actions taken now will determine the long-term viability of decentralized finance. On May 14, 2026, the Kelp DAO, a decentralized finance protocol, suffered a catastrophic hack that resulted in the loss of $293 million worth of cryptocurrency. The breach was detected early in the morning, around 3 a.m. UTC, when unusual activity was reported on the platform. By 4:30 a.m. UTC, security teams had confirmed the breach and halted all transactions. The hack targeted the DAO's smart contracts, exploiting a vulnerability that had gone unnoticed during previous audits. This incident has raised alarms across the cryptocurrency community, highlighting the inherent risks associated with decentralized finance, which often operates without traditional regulatory frameworks. The Kelp DAO, like many DeFi protocols, had positioned itself as a leader in innovation, allowing users to engage in lending, borrowing, and trading without intermediaries. However, this hack serves as a stark reminder of the vulnerabilities that can exist in complex code. The lead developer of Kelp DAO had been a prominent advocate for security in DeFi protocols, emphasizing the need for rigorous testing and audits. Ironically, the hack has undermined his credibility and raised questions about the reliability of self-regulated systems. In terms of financial impact, this breach surpasses the $200 million hack of the Poly network in 2021, marking it as one of the largest in the history of decentralized finance. The immediate fallout includes not only the loss of funds for thousands of users, but also a significant decline in trust towards DeFi platforms. Investors and developers alike are likely to reassess their engagement with such protocols, potentially leading to a temporary downturn in the DeFi market. As the dust settles, regulatory bodies may feel increased pressure to implement stricter oversight and standards for security in the cryptocurrency space. This incident could catalyze a wave of reforms aimed at enhancing the security of decentralized applications, potentially leading to more robust frameworks that better protect users. In the coming months, stakeholders will likely prioritize security audits and collaborative efforts to bolster defenses against future threats. The future of DeFi may hinge on the lessons learned from this significant breach, shaping a safer landscape for users and developers alike. As the Kelp DAO situation unfolds, what will your strategy be in navigating the unpredictable world of DeFi? Share your thoughts in the comments and subscribe for daily deep dives into critical crypto events.